Okay. Last lecture we started capital gains. Okay. So today we are going to continue in capital gains. We did the definition of capital asset, then definition of transfer. Then after that, see, I told you that there are certain transfers which are exempt transfers, okay, given in section 47. But we will discuss these exempt transfers under third part of the chapter, that is special aspects. Okay, separately we are going to discuss them. Now, see, taxability of the capital gain arises in the previous year in which capital asset is transferred. Okay, now what are the exceptions? These three sections are the exceptions in which these three sections, the capital gain arising in certain special situations in these three cases where the capital gain will be taxable during the previous year, which is different from the previous year in which the capital asset is transferred. So year of taxability will not be year of transfer, year of taxability will be some other year. Okay, so that we are going to see. Then computation of capital gain. How to compute capital gain? Full value of consideration minus transfer expense. We are going to get net consideration. Out of that, deduction for cost of acquisition and cost of improvement. The resulting gain will be short-term gain or short-term loss. See, if we are calculating capital gain on transfer of long-term capital asset, so long-term gain we are computing. So while computing the long-term gain, we have to index the cost of acquisition and cost of improvement. But there is one important amendment, that indexation benefit will not be available. Indexation benefit will not be available in respect of a capital asset which is long-term and transferred on or after. Meaning, if the date of transfer of a capital asset is 23rd July or any day after that, there will be no benefit of indexation available. Only the cost of acquisition and cost of improvement will be reduced. Yes or no? Meaning that if the capital asset is transferred as long-term capital asset prior to, only then the cost of acquisition and cost of improvement needs to be indexed. Okay. Now pay attention. Yes. See, this summary table, leave it right now. Later on. Okay. Now this important note. If you are a resident, individual or HUF, you have transferred any? This immobile property was acquired by you prior to 23rd July 2024 and you have transferred this immobile property on or after 23rd July. In the case of such type of immobile property, option to take benefit of indexation will be available or will not be available? Will be available, but it will be available while computing the accordingly, whenever the long-term capital gain on transfer of such immobile property is computed, whenever the long-term gain is computed, what are you going to do? You are supposed to compute without, and it will be taxable under section 112 at what rate? And then you are supposed to compute that gain with indexation also. Then under section 112, what will be the tax rate? Now you will have to compare both these taxes. You will have to compare both these taxes, whichever is more to that tax you are supposed to pay. But it is compulsory that whenever you will calculate the capital gains and show it in the computation of total income, it will be without indexation. So calculate without indexation and show that amount taxable in the total income without indexation. But while you are computing the tax, what did I say? While you are computing the tax, at that time, compute without indexation and compute the tax at the rate of 12.5% and recompute the capital gain by taking indexation and take 20%, whichever is more beneficial, that tax you are supposed to pay. Yes or no? Yes or no? It must be noted that benefit of indexation shall be available only while computing tax liability and not while computing the income under the head For computing the income, such LTCG shall be computed without giving effect to indexation. Yes or no? Now pay attention. Now, section 48 talks about computing capital gain. So how to compute capital gain? Full value of consideration minus transfer expense. You will get net consideration. Net consideration minus cost of acquisition and cost of improvement. You will get the capital gain. Now this is the entire computation of capital gain is given in section. So there is one proviso to section number 48 which says that no deduction for STT shall be available while computing the. So for example, if your capital asset is shares or securities, when you buy them and sell them through recognized stock exchange, at that time you are going to pay STT at both the times, at the time of buying also, at the time of selling also. So whatever STT you are paying at the time of buying as well as that STT will be completely ignored. STT paid on buying will not be added to cost of acquisition. STT paid on selling will not be reduced as transfer expense. The entire STT has to be ignored, because while computing your capital gain, no deduction for STT shall be available. No deduction for STT shall be available. But the same STT can be claimed as a deduction if the income from buying and selling is taxed under the head PGBP. Do you remember that? Specific deduction for STT was available. So if you are in the business of buying and selling of shares and securities, and you have bought and sold the shares and securities through recognized stock exchange, and on that if you have paid STT and buying and selling transactions result into PGBP income, then that STT will be taken to PGBP head and it will be allowed as a deduction under PGBP head. But if your shares and securities are held as capital asset, they are held as, so when you buy them, you pay STT. Don't add that STT to the cost of your shares or securities. Yes or no? And if you sell those shares and securities, if you sell those shares or securities as a capital asset, yes or no? And at that time, if you pay STT, don't reduce that STT as your transfer expense. The entire STT at buying and selling will be ignored, because no deduction for STT can be claimed while computing capital gains. Will you remember? Hello, sir. Now see, in that table, the manner in which we compute the capital gain. So section 48 says how to compute your capital gain. This is the manner in which the capital gain is computed. The first item is FVC. FVC means, so what is the meaning of full value of consideration? Come on, tell me. No, FVC, full value of consideration. So you are an assessee transferring your capital asset. Will you compute capital gain? So what item you are going to take to compute your capital gain? What is the first amount which you are going to take to compute your capital gains? Full value of, you call it. So what is the meaning of full value of consideration? Full value of consideration means whole or full amount of received or as a result of. So you are a transferor of capital asset. See, under salary head, you are an employee. You are under the head house property, you are the owner of the house property. Under the head PGBP, you are a businessman or a professional earning business income. So under the head capital gain, you will be assessee will be owner of the asset, transferor of the capital asset. So there are two parties, no? One transferor of the capital asset and another one transferee. So you are computing capital gains for whom? Transferor, no? So become a transferor and think that you have transferred a. So what thing you will get as an income? What thing you are going to get as an income? Full value of. So this will be the income on transfer of your capital asset. Out of this income, you are supposed to take the deduction. For what? 3 items. Number 1, transfer expense. So this consideration becomes net consideration. Yes or no? Then you are going to take the deduction for cost of acquisition and cost of. So 3 costs, 3 expenses will be allowed out of your income. What is your income? What is your income? And what are the 3 items which you are supposed to reduce from this income? Transfer expense, cost of acquisition, cost of. But who is going to compute this? Who is going to compute this? Transferor of? Transferor of. So are you an assessee? Transferring the capital asset. So what income you will get? What income you will get? What is full value of consideration? Whole or full amount of which is received or as a result of. So on transferring your capital asset, whatever consideration which you have received or receivable, the full amount of that consideration, the whole amount of that consideration will be taken to compute your capital gains. Wait, you have transferred your capital asset for 20 lakhs. How much? So what will be your full value of consideration? Whether you have received or it is receivable. For example, out of that 20 lakhs, 15 lakh is received in this year and 5 lakhs you are going to receive in next year. So how much consideration you will tax? Only 20 or 15? Why? Received or receivable. Even the consideration which is receivable or the consideration which is the entire consideration you are supposed to take to compute your capital gain. So 15 lakh which you have received will also be considered, and 5 lakh which is receivable will also be considered. See, full amount of consideration you are charging, meaning that 5 lakh which is receivable later on is also taxed right now. So what if you are going to receive it later on? That time you will again pay tax on 5 lakhs or you will ignore it. Why? Because right now only in the year of transfer that 5 lakhs has already been taxed as a part of your full value of consideration. Yes or no? So what is the consideration? How much is received? How much is receivable? Even the consideration received will be considered as your full value of consideration, and the consideration which is will also be considered as a part of your full value of consideration. You are not supposed to take the part of the consideration to calculate your capital gain. You are supposed to take full amount of your consideration to compute your capital gain. Will you remember this? Yes or no? Now the consideration for transfer of your capital asset is 20 lakh rupees. 20 lakh, meaning the consideration is received in monetary amount. Yes or no? But sometimes it is possible that you have transferred your capital asset and in return the consideration which you are getting is in kind. You have transferred one asset and in return you should get some consideration in money, no? So you are not getting any consideration in money. You are getting another asset, meaning the consideration is received in. So at that time, what will be your full value of consideration? See, if the consideration fixed was 20 lakhs and you are getting that 20 lakhs in cash, monetary consideration. So what will be your full value of consideration? The money value. The money value, that is 20 lakhs. But what if the consideration is received in? Consideration is received in some asset you are receiving. So the fair market value. What did I say? Fair market value of this asset which you have received. Fair market value of the asset which you have received as a consideration will be treated as your full value of consideration. For example, I have given you my building. So I am a transferor. What I am transferring? So capital gain on transfer of building will be computed. Capital gain on transfer of building will be computed in my hands. Okay. So I will calculate capital gain on transfer of building. Now, as a transferor, what I should get? Money. Money on transfer of building. Yes or no? So whatever money comes, that is my full value of consideration. But instead of money, you gave me gold. Instead of money, you gave me gold. And the value of that gold was 45 lakhs. So I have transferred my building for how much? 45 lakhs. Because in return, what I am getting? Gold worth 45 lakhs. So what is the consideration for transferring my building? Is it cash or it is kind? What I am getting? What I am getting? So the asset which I am receiving, will be the full value of consideration for transferring my building. What is the fair market value of the asset which I am receiving for transferring my capital asset? That fair market value as on the date of the fair market value of the asset received as on the date of will be treated as my full value of consideration for transferring which capital asset? Building. So for me, the full value of consideration is gold. But you have also transferred gold. Hello? Is it your capital asset? Yes. And in return, what are you getting? Building. So when you will calculate your capital gain for gold, at that time, what will be your full value of consideration? Building. So for me, the gold was my consideration for transferring my building, and for you, building was your consideration for transferring your gold. So in the hands of both the persons, the capital gain will be calculated. For me, capital gain on transfer of building. For you, capital gain on transfer of gold. For me, to calculate the capital gain of building, I will take full value of consideration as what? Fair market value of the gold as on the date of transfer of my building. Yes or no? And what will you take? What will you take? The fair market value of the building as on the date of transfer of your gold will be treated as your full value of consideration. But sometimes it is possible that, see, I have transferred one asset to you. For example, I have transferred my building. So what I am transferring? What I am transferring? So I have transferred my building worth for 50 lakhs. How much? 20 lakhs you have given in cash. 20 lakhs you have given in. And for the balance 30 lakhs you have given me shares. Balance 30 lakhs you have given me. So are you giving me full consideration in money? Full consideration in kind? Or partly in cash? Partly in kind. So whatever amount you have given me as money, that is my full value. That will be a part of my full value of consideration. And the asset which you are giving me, that will also be a part of my full value of consideration. So what will be my full value of consideration? The money which is coming plus the fair market value of the shares which is coming to me will be treated as my full value of consideration. Apply some logic. If you have transferred your capital asset, if you have, for transfer of your capital asset, what are you receiving? What is receivable? Money, that will be your full value of consideration, or some asset, that will be your full value of consideration. The fair market value of that asset will be your full value of consideration. Sometimes partly you receive money and partly you receive asset. So both the things taken together will be your full value of consideration. Will you remember this? Now read this part. What is this? Please try to understand and tell me what is the meaning of this. What is the meaning of this? What did you understand? See, normally the meaning of full value of consideration is this only. Whenever you will calculate your capital gain, whenever you will calculate your, you will take full value of consideration, this amount only. What? The full amount, the whole amount of your consideration for transferring your capital asset, whether received or, if received in cash or in kind. Yes or no? You are going to take this only as your full value of consideration every time. But in some special cases, this amount will be ignored. This amount will be, and some special amount, some notional amount will be deemed to be your. The best example, if you are transferring an immobile property, you are transferring an for a consideration of rupees 30 lakhs. For a consideration of, but the stamp duty value of that property, the stamp duty value of that property is 45 lakhs. Stamp duty value is. So, what the government will charge as your income? 30 lakhs, meaning the actual sale consideration, or 45 lakhs, the stamp duty value. If the difference between both of them is more than 10% of your sale consideration, what was your sale consideration? 30 lakhs. 10% of that? 3 lakhs. So the difference between the stamp duty value and sale consideration is 15 lakh. 45 minus 30. How much? 15 lakhs. In that case, the difference is more than 3 lakhs. Your sale consideration we will not take as your full value of consideration. We will take the stamp duty value as your full value of consideration. You are not going to pay tax on 30 lakh of income. You are going to pay tax on 45 lakh of income. Yes or no? So there are some cases in which the full value of consideration will not be the actual amount of consideration. Some notional amount, some imaginary amount will be treated as your full value of consideration. Yes or no? Those cases will come in front of you. In some cases, it will be the amount of insurance claim. In some cases, it will be the fair market value as on the date of conversion. In some cases, it will be fair market value. So every time you are supposed to take this amount as your full value of consideration. But in some special cases, what did I say? Some special cases, a notional amount shall be taken as your full value of consideration. In that case, the actual amount of sale consideration will be ignored, or actual amount of sale consideration cannot be determined also. Yes or no? So in that case, a notional amount will be said under the provisions that this amount should be taken as your full value of consideration to calculate your capital gain. In that case, that notional amount, that imaginary amount you will have to take, and no other amount will be taken as your full value of consideration. So few examples I have given, section numbers. In these sections, what happens? A notional amount is considered as your full value of consideration to compute your capital gain. Whenever we are going to do this, we are going to discuss about this. Yes or no? Next one. Now, from your full value of consideration, what are you supposed to reduce? Transfer expense. What is the meaning of transfer expense? What is the meaning of transfer expense? You are an assessee. What are you doing? Transferring your capital asset, meaning you are a transfer. So in connection with transfer of your capital asset, wholly and exclusively in connection with transfer of you must have incurred some. Those expenses are known as, so any expense, what did I say? Incurred incurred wholly and in connection with, that expense will be treated as. Few examples: registration and stamp duty charges, brokerage and legal expenses, etc. So when you transfer your capital asset, at that time these expenses are incurred by you. You are transferring, hence these expenses are incurred, or these expenses are incurred, hence you are able to transfer your capital expense. So are these expenses wholly and exclusively incurred in connection with transfer of your capital asset? Yes. So these will be treated as transfer expense. Will you remember? But these will be treated as your transfer expense if you have incurred them. Sometimes at the time of transfer, these same expenses are incurred by buyer also, transferee also. So will you consider those expenses to calculate your capital gains? Hello? What if the brokerage and commission is paid by the transferee also? Will you take it as your transfer expense? What if the registration charges, stamp duty charges, legal charges paid by the transferee also? Will you consider those expenses as your transfer expense? No, sir has said registration stamp duty charges is what? Transfer expense. Then brokerage and commission is also transfer expense. Then legal expense also transfer expense. Bloody, these expenses will be your transfer expense if you have incurred them as transferor. In the case of, immobile property, let's say example, I am selling my building, so I am a seller, transferor, and you are buying my building, you are a transferee, meaning you are a buyer. Some broker is there, through that broker, the buyer and seller are meeting and this transaction is happening. So will I give brokerage and commission to the broker? Being a seller, I am giving brokerage and commission to the broker. Is it my expense? It will be my transfer expense. But you will also have to give brokerage and commission to that broker, no? Will it be treated as my transfer expense? But the amount is same, no? Brokerage and so brokerage and commission paid by you will be treated as transfer expense for me, or it is your expense? It is your expense. Will be capitalized. It will be added to the cost of your asset. So what will be the cost of your asset? The purchase price plus the expenses which you are incurring at the time of purchase. So what expense you have incurred? Brokerage and commission. Add that to your cost. I cannot take that amount as my transfer expense, no? But it is just like that. I am calling someone else's wife as my wife. Hello? My expense will be my transfer expense. Yes or no? And the expenses, the same type of expenses incurred by the transferee cannot be taken as my transfer expense. Will you remember this? Yes or no? So, first thing, full value of, did you understand the meaning? What amount is to be taken as full value of consideration? Monetary amount, full amount of consideration. Yes or no? Whether received or receivable. Yes or no? Sometimes the full value of consideration, sometimes the consideration is not received in cash. It is received in, sometimes it is received in kind. So at that time, what are you going to do? The fair market value of the asset received as a consideration. Some coffee now. Fair market value of the asset received in kind as a consideration will be treated as your full value of consideration. Now from that full value of consideration you are supposed to reduce. Remember the format. From that full value of consideration you are supposed to reduce. So what will be your transfer expense? Transferor, what will be your transfer expense? Any expense which you have incurred wholly and exclusively in connection with and few examples I have given. Yes or no? These transfer expense may be incurred before the date of transfer, as on the date of transfer, or will not make any difference. If the expense is incurred wholly and exclusively for transfer of the capital asset, then no need to see that when this expense is incurred. It can be incurred before the date of transfer also, it can be incurred as on the date of transfer also, it can be incurred after the date of transfer also. It will be allowed as a deduction. Yes or no? And they must be incurred by expenses of such nature incurred by the expenses of these nature incurred by the shall be added to the cost of acquisition of such asset in the hands of the transferor. Transferee shall not be treated as transfer expense in the hands of. The same thing I have explained. Yes or no? Now, after reducing transfer expense, what you will get? What you will get? Net consideration. Yes or no? Now, from that net consideration, two things you are supposed to reduce. Two things. Number one, cost of acquisition and cost of acquisition and. So, are you a transferor? Transferring your capital asset. So, what will be the cost of acquisition of that capital asset? What will be the cost of acquisition of capital asset? Purchase price plus any expenses incurred. Now pay attention. Huh? Very important discussion. If you will understand this, a headache will go. And people commit mistake over here only. Okay, no? Pay attention. See. This is a transferor. Name is Mr. X. Please understand, huh? I'm trying to go a little bit slow. Why? Because I need you to understand this concept properly. This is Mr. X. Okay. What he did in the previous year, 2009-10. I'm talking about current previous year or any earlier previous year. In 2009-10, in this previous year, Mr. X acquired some capital asset. What he acquired? Capital asset. Capital asset acquired. Before transferring, bloody he should have the capital asset, no? So from where the capital asset will come? He will have to first acquire. Yes or no? Now, capital asset was acquired, and it was acquired at the time of acquisition, at the time of the purchase price. The purchase price of the asset was 10 lakh rupees. How much? And at the time of acquisition, some expenses were also incurred, like brokerage, registration charges, this, that. Yes or no? At the time of acquisition, expenses were amounting to 2 lakhs. Now what Mr. X will say? What is the cost of his asset to him? Only 10 lakh or 12 lakhs? So purchase price plus purchase related expense will give you actual cost. Will give you actual cost of the capital asset at the time when the capital asset was acquired. What was the actual cost? 12 lakhs. Now the asset which actually costed how much? 12 lakhs. 10 lakh you gave to 10 lakh you gave to the person from whom you are acquiring, and 2 lakh you incurred as a cost. Yes or no? Purchase related expense. So this 12 lakh became your actual cost. Now this asset whose actual cost is was held by you. You are an assessee holding this capital asset. You're holding, and in the same person, this same person, Mr. X, in the previous year, 24, 25. Now in this previous year, the same capital asset which was acquired, yes or no? Now the same capital asset which was acquired in 2009-10, in the year 24-25 was transferred. Now tell me, transferred means it could be sold, it could be exchanged, it could be relinquished, there can be extinguishment of right in the capital asset, yes or no? There can be conversion into stock in trade, there can be compulsory acquisition, many things can happen, yes or no? So let's take example, he is selling. Transferred means he sold. Okay, so the capital asset was sold, and it was sold for a selling price. It was sold for a selling price of rupees 50 lakhs. How much? So are you an assessee? Yes or no? Now in this year, what are you doing? What are you doing? Transferring your capital asset. So at the time of transfer of your capital asset, will you calculate your capital gain? Yes or no? Full value of consideration. What will be your full value of consideration? 50 lakhs. You are supposed to compute the profit and gain. The amount received on sale is a gross amount that you are not supposed to pay tax on. Yes or no? You are supposed to pay tax on profit and gain. So profit or gain will come. How will you calculate? Income minus expense. So income is how much? So what will be the expense? At the time of transfer, at the time of some transfer expenses also got incurred. Yes or no? And the transfer expense were, example, 1 lakh, transfer expenses were 5 lakhs. So this 5 lakh rupees of transfer expense happened. So net amount of your income will be 45 lakhs. Net amount of your income will be. Now to earn that 45 lakhs of income today, you had to buy the asset. At that time you had to incur the cost. That is nothing but your cost of acquisition. That is nothing but your cost of acquisition. At what cost you acquired? What cost you acquired? So to calculate the profit, or gain from the net amount which you are receiving for transferring the asset, you are supposed to reduce the cost at which you had acquired the capital asset. You had acquired the capital asset for 12 lakhs. So that is going to be reduced. Yes or no? And what is your cost of acquisition? What is your cost of acquisition? Not just that. During your holding period, if any improvement was done, on this asset, what is the meaning of improvement, sir? What is the meaning of improvement? Improvement means any capital expenditure. Improvement means by incurring such capital expenditure, the value of asset will increase. The value will increase by adding one floor. If I have a building and I'm constructing one more floor, additional floor on that building, now the value of building will remain same or it will increase. So adding one floor, cost incurred to add one floor is cost of improvement. Yes or no? I did some extension. I broke these walls and extended the classroom so that the area increases. So earlier the classroom was small, having small area. Value was less. Now extension was done, the area increased. So definitely the value will also increase. So the cost of extension will be your cost of improvement or will not be your cost of improvement? Will be your cost of improvement. Yes or no? So any improvements done by you, improvement means any cost incurred by you, and by incurring that cost, if the value of that asset is increasing. So right now you are able to receive this 50 lakhs. Right now you are able to receive this for that improved asset. If that improvement was not done, this 50 lakhs you would not have received. You would have received less amount. Yes or no? So this increased amount of selling price you are receiving for an improved asset. Hello? What if only ground floor, only this ground floor you acquired and you are selling this building with the ground floor? That's it. The value is 30 lakhs. But when you constructed additional floor, one floor extra, now for this building you will get 30 lakhs or more amount? 50 lakhs. So this 50 lakhs you are going to get for an improved asset, no? So whatever amount which you are getting more as an income right now, some amount is attributable to that improvement also. So reduce that cost of improvement also. Yes or no? Reduce the cost of. Now improvement was done by you in the year 2000, previous year 2016-17. Which year? So in the year 2016-17 you did some improvement, and improvements done by you was 10 lakh rupees. Example, how much? 10 lakh. If you would not have done this 10 lakh rupees of improvement, you would not have received this selling price. You would have received less selling price. Yes or no? After improving the asset, your value increased and hence you are receiving this 50 lakhs. Yes or no? So reduce the cost of improvement also. Will you remember this? This is simple. Cost of acquisition and cost of improvement. Incurred by at the time when the capital asset was acquired by him, or at the time when he improved the capital asset. Yes or no? So now please pay attention. Now if you want to compute the profit and gain here, what will be your profit and gain? Tell me, what will be your profit and gain? Compute. How come 23 lakhs? What is the full value of consideration which you took? 50 lakhs. The full amount of consideration received or receivable for transferring the capital asset. What is that amount? Minus, which is your transfer expense. What will be your net consideration? From that net consideration, assessee reduce the cost of the asset, at which reduce the amount of cost at which you acquired the capital asset earlier. At what amount you acquired the asset? Actual cost, which is nothing but 12 lakhs. And also reduce the cost of any improvements, the cost of any incurred by you while you were holding the capital asset. Yes or no? What was the cost of improvement? So minus 12 lakh, minus 10 lakh out of 45 lakhs. What are you going to get? Now you got the gain. Okay, no? Is this gain short term or long term? 23 lakh gain, correct amount. Very good. Excellent. But what is the nature of this gain? 23 lakh is short term or long term? Short term or long term? Is the gain long term? How did you come to know? When did you acquire the capital asset? When did you acquire the capital asset? And when are you transferring? So the date on which you acquired the asset, from that date till the date immediately preceding to date of your, can I say it will be from 2009-10 to 24-25? Hello? Is this period more than 12 months? If those four assets are there. Which assets? Listed. If the asset was listed security or units of equity oriented mutual fund or units of UTI, or if the capital asset which you are transferring right now was one of these four assets, then how many months you are going to check? Is it more than 12 months? The resulting gain will be long term. Resulting gain will be two assets. Remember those two assets. Number one and number two. Number two. So if the capital asset acquired by you was unlisted shares or immobile property, then 24 months period of holding. Is the period of holding more than 24 months? So resulting gain will be? In case of all other assets, in case of transferred, what did I say? Transferred prior to 23rd July, 36 months. Transferred. So is your date of transfer prior to 23rd July? Example, you transferred on 20th May. 20th May this year. So this year you transferred on 20th May, which is prior to 23rd. And the capital asset is not those four assets. The capital asset is not those two assets. Capital asset is any other asset. How much period of holding you are going to check? 36 months. How much? So if the capital asset is none of those four assets, none of those two assets, you are going to check. Why? Because that capital asset you have transferred in this year prior to 23rd July. Now if the transfer in this year was on or after, for example, you are transferring the asset on 19th December 2024. So the transfer is taking place on or after? On or after? And the asset is none of those four assets, none of those two assets, any other asset. How much period of holding you are going to see? Now check 24 months. Is it more than 24 months? Yes or no? So the asset is long term and the resulting gain will be long term. Yes or no? Now how to do that? Indexation and all that we are going to learn. But did you understand this basic part? Yes or no? Now being a transferor, what did I say? Being a transferor, see, you are a transferor, you are transferring the capital asset right now. So on the transfer, whatever amount of consideration which is received or receivable, that will be your full value of consideration minus transfer expense. But this asset which you are transferring right now, see, the asset which you are transferring right now, what was the cost of acquisition of this asset to you? What was the cost of improvement of that asset to you? Reduce both cost of acquisition as well as cost of improvement while computing your capital gain. That will give you the profit and gain. Profit and gain. That profit and gain will be taxable. But to compute that profit and gain, reduce the cost at which you acquired the capital asset. Reduce the cost of any improvement because of which the value of your asset has increased. Got it, sir? Now this is the normal meaning. Normal meaning. Now see, under the Income Tax Act, under the provisions of section 55, provisions of section talks about cost of acquisition and cost of improvement. See, which section I said, sir? So, section 55. Section 55 has two parts. Section 55 has two parts. 55 subsection 1 and section 55 subsection 2. 55 subsection 1 and 55 subsection 1 talks about cost of improvement. 55.1 talks about and 55.2 talks about cost of acquisition. Cost of, okay, no? Now pay attention. 55.2 is further divided into 4 parts. How many parts? 55.2A, 55.2 double A, 55.2 AC and 55.2 B. 55 2A, 2 double A, then 2 AC and 2. Now see, 55 subsection 2 clause A talks about the cost of acquisition in the case of intangibles. What? Intangible assets. 55.2 double A also talks about cost of acquisition in case of shares which you acquire by paying money, shares which you get in the form of bonus, shares which you acquire as right shares, and also about the right to acquire what? Right shares. Right to acquire the right shares. Yes or no? And 55.2 AC talks about the cost of acquisition which you are going to take for listed equity shares or units of equity oriented mutual fund. Yes or no? Listed equity shares or units of equity oriented mutual fund or units of business trust which you are transferring through recognized stock exchange. So can I say listed equity shares plus which are transferred through recognized stock exchange on or after 1st April 2018, and on the transfer of these shares, the long-term capital gain is to be computed under section 112A. So these assets, the listed equity shares are transferred on a recognized stock exchange on or after 1st April 2018, and on the transfer of this asset, if you are going to compute long-term capital gain under section, so what cost you are going to take for these listed equity shares? That is given in section 55 to AC. Yes or no? And last but not the least, 55 to B gives you the option. What option 55 to B gives? That I am going to tell you in some time. Yes or no? Now see, if your law has specifically told you that if you are computing your capital gain for intangible assets, if you are going to calculate the capital gain for what cost you are going to take, it is specifically given here. You cannot take any cost other than this amount. Because the law wants you to take this amount as your cost while computing the capital gains for your intangible asset. Or sometimes you might transfer the shares, bonus shares, right shares, or right to acquire right shares. So the capital gain can be calculated on transfer of shares, bonus shares, right shares, or right to acquire right shares. So whenever you will calculate the capital gain for these assets, what cost of acquisition you are going to reduce? What cost of acquisition you are going to reduce is given in 55 to AA. Yes or no? And if you are going to compute capital gain under section 112A, you are going to compute long-term capital gain under section on transfer of listed equity shares, units of equity oriented mutual fund, units of business trust, etc. Yes or no? Which you have transferred through recognized stock exchange on or after 1st April 2018. So what cost of acquisition you are going to take for such type of capital asset is given in 55 to AC. Specifically for this capital asset, this cost needs to be taken. If the capital asset is this, take this amount as a cost. If the capital asset is this, to compute the capital gain, take this amount as a cost. If you will take any other amount, if you will take, your capital gain computed will not be correct. It will be wrong. The law wants you to compute your capital gain for these assets after taking these amounts as what? Cost of acquisition. Yes or no? And in 55(2)(b, you are given one option also. You are given one option also. What option? To take the fair market value of the capital asset as on 1st April 2001. To take the fair market value as on 1st April 2001 as your cost of acquisition. But that option will be available only if the capital asset was acquired prior to 1st April 2001. That option is given in 55 subsection 2 clause B. Will you remember this? Hello sir. So I have tried to simplify this thing for you. I hope you understood this thing. What did you understand? I'll simplify it more. Every time, whenever you will transfer your capital asset, whenever you will transfer your, what will be your cost of acquisition? Keep it simple. Actual cost. Simple, no? What will be your cost of acquisition? Actual cost. Hello, sir. But if the capital asset is covered by 55(2), what will be the cost of acquisition? Actual cost. No. Given in 55(2)(a). That amount I will take. Yes or no? What if the capital asset is covered by, what if the capital asset is shares or right to acquire the right shares? Then will you take actual cost? No. 55(2)(a). Yes or no? What if the capital asset was listed equity shares transferred through recognized stock exchange on or after 1st April 2018? Hello? And you are going to calculate the long-term capital gain under section 112A. What will be your cost? Actual cost. No. 55(2)(ac). Whatever is given there in that clause, now that amount you are going to take as a cost. Any other asset. What did I say? Not given in 55(2)(a), not given in 55(2)(AA), not given in 55(2). Any asset. What will you take? actual cost. What are you going to take? But these specific assets, what cost of acquisition needs to be taken is given in these clauses. Getting my point? So one by one we'll finish this thing. So cost of acquisition will be done. But wait, there are certain situations. There are certain where actual cost or this cost, nothing will be taken. A notional amount, an imaginary amount will be deemed to be your cost of acquisition. Just like deemed full value of consideration can be there, yes or no? In that same manner, deemed cost of acquisition can also be there. Are you understanding what I am trying to convey? If you'll understand this part now, which I am going to discuss in the basics, if you pick up this part, entire capital gain will become easy for you. Understanding? Whatever type of question they will ask you, you will be able to crack that question. But you need to be a little bit aware and alert what I am trying to tell you. Are you understanding this? So, are you Nasasi? Transferring your capital asset. Hello? On transferring your capital asset, whatever consideration for transfer of your capital asset is there, whatever consideration for transfer of your capital asset is there, full amount, whole amount of that consideration will be full value of consideration. Full value of. So, full value of consideration can be actual amount of what? Consideration. Whether received or receivable. Always we are supposed to take this. But if this amount, if the law says, then I will have to ignore this amount and some notional amount, some imaginary amount can also be taken as your full value of consideration. So, answer is so simple, no? Only in 6 lines you are going to get your answer. Full value of consideration minus transfer expense, net consideration minus cost of acquisition minus cost of improvement. Yes or no? And in the 6th line you are going to get your answer. But in these 6 lines, what amount should be taken? That is the main catch for capital gain. If you identify the amounts correctly, you are going to get full marks in capital gain. Not a single mark is deducted. But identifying that which amount will be taken as my full value of consideration, that is important. What amount should I take from my question as my transfer expense? That is important. So, in the question, there will be 2 amounts and you will always be confused. Should I take this amount as full value of consideration or should I take this amount as my full value of consideration? Simple. Always take the full amount of consideration. Whole amount of consideration, received or receivable. But in some special situation, which you have to keep in mind, in some special situation, this amount cannot be taken as your full value of consideration. A notional amount, which is deemed full value of consideration under different section. 45(1) is there, 45(2) is there, 45(5) is there, section 50C is there, 50CA is there. There are many sections. So, for example, what did I say? For example, section 50C is there, 50CA is there, etc. So, whenever this case will come, I will tell you that see, in this case, actual amount of consideration is ignored and this notional amount, they are saying that compute your capital gain by taking this notional amount as your full value of consideration. Getting my point? Now, FVC you have done. Sometimes actual amount and sometimes actual amount and sometimes yes or no. Now, second one is Second one is transfer expense. Yes or no? Now, what will be the transfer expense? Transfer expense always actual amount, which is wholly and actual amount of expenditure, wholly and exclusively incurred by transferor, ROR, transferor, and not the transferee, incurred by the transferor for transfer of his capital asset, wholly and exclusively incurred by the transferor for transfer. Whatever actual amount of expense which you relate like this, that amount you take as your transfer expense. Yes or no? This I am telling you that how to identify these amounts from the question. Getting my point? Now next one. What are you going to reduce now? Cost of acquisition. What are you going to reduce now? So what will be your cost of acquisition? Three amounts. Either actual, which will be nothing but PP plus PRE. PP plus PRE. PP means purchase price. PRE means purchase related expense. Sorry. PP plus PRE is nothing but actual cost. Yes or no? So, you will take actual cost. Or you will take cost which is given in 55 to clause A, clause AA or AC. Wait. That's it. Okay. Now whether the actual cost is there, or you are taking cost as per 55.2. In both the cases, you get option. You get to take option 2, the fair market value as on 1st April 2001 as what? Cost of acquisition. Option to take fair market value as what? Cost of acquisition. This option is given under section 55 to B. 55 to for all capital asset except 55 to A, meaning intangibles. Meaning for all capital assets you are going to get this option. Whether the capital asset is covered by 55 to AA, whether the capital asset is covered by 55 to AC, whether the capital asset is any other capital asset, yes or no? For all capital assets, you are going to get this benefit of taking fair market value as on 1st April 2001 as your, but this option is not available for those assets which are covered in 55 to A, 55 to intangibles. And this option of taking the fair market value as cost of acquisition under section 55 to B, this option is given to take fair market value as on 1st April 2001 to take what? Take fair market value as cost of acquisition. This option is available for all assets except 55 to A if capital asset is acquired prior to 1st April 2001. Don't worry, right now you are not going to understand fully. Even I know. But slowly and gradually you will digest these things. No, you will teach capital gains to others. But right now, just focus on whatever I am explaining. What did I say? What will you take as cost? For some assets, 55 to A. Intangibles. Hello? For some assets, 55 to double A. Shares, etc. Yes or no? For some assets, 55 to AC. Listed equity shares. For all other assets? For all other assets? For all other assets? So whether you are taking actual cost or you are taking cost as per 55 to, whether you are taking actual cost or you are taking 55 to, cost as per 55 to or actual cost, this will be your cost of acquisition. But if, what did I say? If the assets were acquired prior to, assets were acquired 1st April 2000, then you get the option whether to take this amount as your cost or fair market value as on 1st April 2001. You can take this amount also as cost. So, can you take this amount as your cost? Yes. And you have the option to take the fair market value as on 1st April 2001. You have the option to take this fair market value also as cost. Take this amount as cost or take this amount as your cost. Which will you take as your cost? Definitely, whichever is higher the cost, lower the capital gain and lower the tax rate. So you get this option to take the fair market value as cost. You get this option for all assets. If the asset was acquired prior to, but this option is given for all capital asset except, got it? What if the assets are covered in 55 to double A? What if the assets are covered by 55 to AC? What if the assets are all other assets? For all assets you get this option, but not for intangibles covered in 55 to A. Will you remember this? Hello sir. Now wait. Sometimes this, sometimes this, sometimes this, sometimes, and no fair market value option is there. When there will be no option to take fair market value. Common sense. That option is available only if the asset was acquired prior to 1st April 2000. But what if the asset was acquired on or after 1st April 2001? Will you get this option? Take actual cost and take the cost which is given. Hello sir. Then no fair market value as on 1st April 2001 will be given in the question. Why? Because that option does not exist only. Got it sir? Now pay attention. Sometimes you will take this or you will take this as what? Sometimes you will take this or fair market value, whichever is higher. Sometimes you will take this or fair market value, whichever is. But sometimes you will ignore everything. And a notional amount will be deemed to be, will be your cost of acquisition. No need to take actual cost, no need to take 55 to cost. Forget everything. Forget everything. You are going to take that amount as cost which we are telling you to take. Deemed cost of acquisition. Now, by looking at the question, you should be very clear in your mind whether I should take this amount as my cost, this amount as my cost, or this amount as my cost. If you identify this thing correctly, only then full marks. If this amount is wrong, your entire calculation is wrong. Getting my point? So entire game in capital gain is what? Identifying the correct amount. If you identify the correct amount and calculate the capital gain, you are never going to be wrong. So full value of consideration, did you understand this thing? Transfer expense, did you understand? Now, what is this? Cost of acquisition. Few examples of deemed cost of acquisition. Few examples are, the best example is section 49. Section 49(1). Cost to previous owner shall be deemed to be the cost of acquisition in the hands of assessee. Assessee, you have got the asset. Oh, as a gift. As a, what was your actual cost? 0. Oh, so you will take 0 actual cost as your cost of acquisition. No, you have acquired the asset by way of gift. Gift is a mode specified under section 49(1), and which says that if the asset is acquired by the assessee by way of any modes prescribed under section 49(1) and gift is one of those modes, in that case the cost of acquisition in the hands of assessee, what will be the cost of acquisition in the hands of the assessee? Cost to the previous owner shall be deemed to be your cost of acquisition. In that case, I will not take my actual cost. My actual cost is what? 0. What I will take? I will have to first determine the cost in the hands of previous owner, and that amount I will have to take as my cost. In case of slump sale, which sale? Slump sale. What cost you will take? Actual cost. What cost you will take? 55(2). 55(2) does not talk about that. And actual cost you cannot take. So, net worth of the undertaking transferred by way of slump sale will be deemed to be the cost of acquisition. Understanding? So 49, then section 50B, etc. There are certain other sections also. Getting my point? So either the cost will be actual cost. See, first of all, no, first thing we are supposed to take actual cost. That's it. But if reading the question, we come to know that the case is covered by 55(2). So what was the cost given for this asset under section 55(2)? That we have to recollect, and we have to identify that amount from the question. Getting my point? That amount we are going to take as a cost. Or sometimes we will take some notional amount also as cost. But for that, you should be aware that in this case, this notional amount will be taken as cost. In this case, this notional amount will be taken as cost. You have to remember those cases. Yes or no? And please make sure notional amount taken as cost, calculate the capital gain. No FMV option is given there. FMV option is given only for actual cost or 55(2), and specially 55(2)(a), intangibles. For intangibles, the option to take fair market value does not exist. Okay, no? Now, cost of acquisition can be this, can be this, can be this. Okay. Now see, I will elaborate this cost of acquisition also. Don't worry about this. There are a lot of things which I have to discuss in this cost of acquisition. But before that, let me finish with my format. That whenever I will be calculating the capital gain in my format, which amount I have to take? Yes or no? In FVC, whether I will take actual amount or sometimes I will take notional amount. In transfer expense, what I am going to take? Actual amount of expense, wholly and exclusively incurred by the transferor for transferring the capital asset. Yes or no? In cost of acquisition, what amount I'll take? Either I'll take actual cost or I'll take 55(2), or sometimes notional amounts can also come as my cost of acquisition. Yes or no? Now next one, cost of improvement. Cost of improvement. What is cost of improvement? This is capital expenditure. capital incurred by assessee, incurred by assessee, sorry, incurred by the assessee for incurred and incurred on the capital asset, on capital asset, and which increases or enhances the value of what? Capital asset. But this capital expenditure can be incurred prior to 1st April 2001 on or after 1st April 2001. Yes or no? So if it is incurred prior to 1st April 2001, then the cost of improvement will be ignored. Will be, don't take in the computation of capital gains. No need to consider this cost of improvement. Yes or no? But what if it is incurred on or after 1st April 2001? What will you do? Consider. Consider means don't ignore. Don't take this cost of improvement to compute your capital gain. Any cost of improvement which is incurred on or after 1st April 2001. Done, sir? Should I move ahead? So these amounts you will be able to identify properly and you will be able to calculate the capital gains. So basic questions without any complications. What did I say? Basic questions without any. We'll have this. We'll have this. We'll have this. Getting my point? And we'll have this. Everything actual. Getting my point? But in special cases, specific charge, special aspects, when we are going to do these parts, 5 parts. The chapter has how many parts? Second part will be specific charge. Third part will be, that time we are going to learn. This will also come into picture. Then this will also come into picture. Getting my point? So all these special items are dealt with in separate part of the chapter. Getting my point? But first of all, my capital gain will be calculated like this. Now wait. Now you'll have to see the date of transfer also. The date of prior to 23rd July. Prior to, then old period of holdings to be checked. Old. 12 months, 24 months and if this date of and if you check old period of holding, if you check and the asset happens to be your long-term capital asset, happens to be your, then the cost of acquisition and the cost of improvement which you have identified will be indexed also. So one note I am writing here. If date of transfer of capital asset is prior to 23rd July 2000 23rd July 2000. So in this case, what are you going to do? And the capital asset is what? Long-term capital asset. Sorry, wait. Date of transfer is prior to 23rd July. So 2 things you are supposed to do. 2 things. Number 1, check new period of holding or old period of holding. Check new period of holding or old period of holding. old period of holding, that is 12, 24, 36. Yes or no? And based on this period of holding, if capital asset is what? Long term. Capital asset is long term. Then cost of acquisition and cost of improvement to be indexed. Will you remember this? So while calculating the capital gain, you are supposed to check this also. Okay, that you are calculating capital gain, but the transfer was made prior to 23rd July. You identified the cost of acquisition properly, cost of improvement also properly you have identified. Yes or no? Now you have to index both of them. Why? Because since you transferred the capital asset prior to, so you checked the old period of holding or new period of holding. You checked the old period of holding, and by checking the old period of holding, you came to know that the asset is long term. So in the case of long term capital asset, indexation was available till prior to 23rd July. The same thing. Now pay attention. If date of transfer, what did I say? Of capital asset was on or after 23rd July 2000 and so what will you do here? Come on, tell me. You will check old period of holding or new period of holding. Check new period of holding. That is 12 months, 12, 24, 36. 12, 24, 36. Make this 24. So for those assets for which 36 months you used to check, for those assets also now you will check 24. Yes or no? And now based on this period of holding, based on this new period of holding, even if capital asset is what? Long term capital asset. Even if capital asset is cost of acquisition and cost of improvement, indexed or not to be indexed? Not to be indexed, because from this year on or after 23rd July, the indexation benefit is gone. Will you remember this? Easy, difficult? Trying to make it as easy for you as I can. Okay? So tell me, cost of acquisition, cost of improvement as per 55 subsection 1. What will be the cost of improvement? Any capital expenditure. So first of all, the cost will be treated as cost of improvement, expense will be treated as cost of improvement if it is incurred on the capital asset. On or after, any capital expenditure incurred on or after 1st April 2000, which increases the value of my, will only be treated as cost of improvement, and for that only you are going to take the deduction. Yes or no? Now please pay attention. This last discussion and then I am going to give you a break. Okay? Sure, no? Should I? See. If capital asset is any capital asset. Any capital asset. First of all, I am not talking about those assets which are covered by 55(2). 55. Let's not bring that 55(2) in the picture right now. Let's assume that you have any capital asset. So what the law says? Law says that if you have any capital asset which was acquired, prior to 1st April 2001, or it can be acquired on or after 1st April 2001. Okay. The capital asset, this type of capital asset is transferred right now. You are transferring a capital asset right now. But first of all, ask yourself, the capital asset which you are transferring right now, when did you acquire that asset? Oh, you acquired that asset in 2009-10, meaning on or after 1st April 2001. Oh, you acquired the capital asset in 91-92, meaning prior to 1st April 2001. So, if the capital asset is acquired on or after, the cost of acquisition of that capital asset was its actual cost. What is actual cost, sir? PP plus PRE. PP plus, yes or no? Now, if the capital asset was acquired prior to 1st April 2001, what will be the cost of acquisition? Its cost of acquisition will be its actual cost only. But we are giving you an option. To take fair market value as on 1st April 2001. You can take this amount also as cost. So which one would you prefer? Would you prefer actual cost or you'll prefer fair market value? Definitely, sir, whichever is higher. Yes or no? Whichever is. For all assets, can you do this? For all assets, you can do this. Yes, for all assets, I have to do this. This is the basic thing which you are supposed to keep in mind. Hello? If the capital asset was acquired on or after 1st April 2001, date of acquisition is on or after 1st April. In my example which I took here, what was the date of acquisition? On or after 1st April? So what is the actual cost? That will be taken as cost of acquisition. But what if the acquisition happened in 93-94? Then I get the option. To take either the actual cost or as on, and that fair market value will always be given in the question. Compare the fair market value with actual cost. Compare the fair market value with actual cost. Whichever is, take that amount as cost of acquisition. Got it, sir? Now pay attention. Any capital asset other than immovable. Let's separate immovable property. What I have done? For all assets, I am supposed to do this only. Hello, sir. For all assets, I have to do this only. But, sir, wait no. For all assets, I will do this. Let's separate immovable property. Let's separate. So what I'll do now? I'll do the same thing for immobile property separately. Yes or no? Hello? So let's discuss. If color, blue color. If capital asset is what? Immovable property. What I have done, I have separated immobile property from above discussion. Okay, no? Now tell me, are you transferring immobile property right now? So, what will be the cost of acquisition of immobile property? What will be the cost of acquisition of immobile property? That is what we are going to learn now. Hello? Are you transferring any capital asset? Are you transferring any capital asset? Yes. If you transfer any capital asset, cost of acquisition will be determined in this manner. Hello, sir. But any capital asset other than? Because for immobile property, I am going to tell you now. Now tell me, if the immobile property was acquired prior to 1st April 2001 or on or after 1st April 2001, prior to 1st April 2001, on or after. See, here what will be the cost of acquisition? Come on, tell me. It will always be actual cost. Yes or no? So if it is any asset, actual cost is cost of acquisition. Even if it is immobile property, actual cost is cost of acquisition. There is no difference. Now, what if the asset was acquired prior to 1st April 2001? Did I get the option to take the fair market value as my cost? Yes or no? What will happen here? Will I get that option to take the fair market value as my cost? Will I get this option? If you are attentive in my lecture, no, you will give me the correct answer for this. Do you get this option for all assets? Did I say excluding immobile property? So even if immobile property is there which was acquired prior to 1st April 2001, in that you are going to get this option. Then sir, why did you separate? You should have kept there only. No. Why did I separate? I am going to tell you what. It was acquired prior to. So what will be the cost of acquisition? Sir, A, your actual cost, and B, the fair market value as on 1st April 2001. But this fair market value should not be more than the stamp duty value as on 1st April 2001 if available. For other assets, no, there is no such restriction that fair market value should not be more than. But for immobile property, there is a restriction that if the fair market value as on 1st April 2001, you have the option to take the fair market value, yes or no? But if that fair market value is more than the stamp duty value, then you cannot take the fair market value in excess of stamp duty value. Restrict your fair market value to the extent of stamp duty value as on 1st April 2001 if available. If. Got it? Hence, I had to separate it. Otherwise, I would have kept it above only. Here also, you are going to get the option. Here also, you are going to get the option to take the fair market value as on 1st April 2001 as your cost. But remember, this fair market value cannot be more than the stamp duty value of that property as on 1st April 2001 if available. Got it, sir? So what I'm going to do here? Now, what should I do here? Come on, tell me. In point number B, no, I will write one more amount. What? Stamp duty value as on. Then point number B will be FMV or stamp duty value, whichever is lower. That will be my point B. And point B or point A, actual cost, whichever is higher, will be my cost of acquisition. Got it, sir? So tell me, should I take actual cost? Should I take actual cost or I should take fair market value? Whichever is higher, I will take that. So fair market value. In part B, fair market value as on 1st April 2001 or stamp duty value as on 1st April 2001. Can I say if available? If available. If not available, then take only fair market value. Getting my point? If not available, then take fair market. But if available, you will have to see that the fair market value does not exceed the amount of your stamp duty value. Yes or no? So this or this, whichever is. So this lower amount will be your point number B, and this actual cost A or B, whichever is higher, will be treated as your cost of acquisition for immobile property. Now, I'll give you one example. Actual cost of your immobile property, I am saying that you acquired immobile property in 1993-94. When did you acquire? 93-94. You acquired your immobile property. Actual cost was 2 lakh rupees. So in 93-94, actual cost was. So can you take this amount as cost? Yes. But you have the option. As on 1st April 2001, the fair market value of the property was 5 lakhs. Do you have the option to take this fair market value? So you can take 2 lakh also, you can take 5 lakh also, whichever is higher. Done, sir. In the question, stamp duty value is not given. In the question, meaning as on 1st April 2001, stamp duty value amount is not available. And whatever will be the stamp duty value, we assume that stamp duty value was more as compared to fair market value. And my fair market value does not exceed stamp duty value. Yes or no? If stamp duty value was lower, give me the amount of stamp duty value. I will not allow my fair market value to be more than. But you are not giving, that means stamp duty value is not available or it is more than fair market value. So my fair market value is within the limit of that stamp duty value. Yes or no? So if no information in the question is given about stamp duty value, directly compare both these amounts. But your examiner, if your examiner will be Umang sir, he will give you stamp duty value also as on 1st April 2001. Stamp duty value was 5,60,000. Can you take the fair market value? Yes. But your fair market value should not be more than. Is it more than stamp duty value? So take fair market value. or whichever is, yes or no? This or this, whichever is lower, take 5 lakh. Ayyo. Now wait. Huh? Sir, the stamp duty value was only 4 lakhs. Do you have the option to take fair market value? Yes, but only to the extent of stamp duty value. Only to the extent of. So your fair market value, any amount of fair market value over and above stamp duty value will be ignored. You will take the fair market value or actual cost, whichever is higher, but the amount of fair market value in excess of stamp duty value will be ignored, will be. So how much fair market value will be taken? Full 5 lakh or only to the extent of 4 lakhs? So 4 or 5, whichever is lower, take 4. 4 or 2, whichever is higher, 4 lakhs. Understood? Everyone? Sir. This is the end of first important discussion. Now wait. For all assets, actual cost is the cost of acquisition, including immovable property. But if the assets were acquired prior to 1st April 2001, if the assets were acquired, then cost of acquisition will be actual cost or fair market value as on 1st April 2001, whichever is. But in the case of immovable properties acquired prior to 1st April 2001, option to take fair market value is there or not there? Is there. But that fair market value should not exceed the amount of stamp duty value. Will you remember this? Now what about the balance assets? Out of these assets, now what I'll do? I will segregate intangible assets. For intangibles, for all assets you are supposed to do this. Immobile property you are supposed to do this. Now from all assets I will separate intangibles. For that we will apply 55(2)(a). From all these assets we will separate shares. For that we are going to apply 55(2)(a). From all assets we will separate listed equity shares. For that we will apply 55(2)(ac). Getting my point? If not covered in 55(a), not covered in 55(2)(a), 55(2)(a), 55(2)(ac), then definitely covered here, hello, or here. Got it? This is so easy to calculate, but you have to be attentive. Take half an hour break. Within half an hour we are meeting.